It's another half hour of markets analysis and insights on Business Incorporated live from Channels TV Lagos. And here's what's coming up. African Development Bank lowers the continent's economic forecast for 2023 and 2024. Zambia's inflation hits 20-month high as currency settles at record low. And experts say political instability and policy uncertainties in Zimbabwe discouraging foreign direct investments. Hello and welcome to the program. I am Will Ibang. Let's start off with market numbers. First up, as usual, major equities in Africa. At intraday, major equities were trading mostly positive at intraday, except for Nigeria. Let's see, it was down 0.02% at intraday, still at 71,000 points. South Africa, on the flip side, was up 0.48%. Now let's see how Egypt performed at intraday. It was in the green at intraday. Also, we see Kenya also trading down for Wednesday's trading session. And let's look at the NGX now and see what moved the market. Why is the market trading in the red? As a flip back to the green, we have Mukhtar Mohammed, CEO Finance with Mukhtar, to share this insight with us. Good afternoon, Mukhtar. It's good to have you on the program.
Good afternoon, Will. My pleasure.
So, Mukhtar, we did see earlier in the day the NGX trading marginally lower. Can you tell us if it is back in the green or investors still selling and being cautious?
I think cautious is the word. I think you took it out. Cautious is the word, especially with the banking stocks. It seems that the gain that we thought with the pronouncement by the CBN governor for recapitalization is beginning to erode us at the moment. So we're seeing upside in some of the banking stocks, but some of the major ones, UBE is down, but though slightly. Assets also down, but surprisingly, ETI seems to be making a move now. So GTCO is up, also surprisingly, and also Zenith is down. So definitely the tier one banks are there. First Holding also is trading flat. So it's mixed, and when you look at the oil sector at this moment, it's only Wando that seems to be trading on the green. So it's all mixed. I think it's mixed market we're getting at this moment, but you never can tell. We still have almost an hour before the close of market. Things could turn.
Yeah, definitely. There's always that dramatic turn in the market. But let's put a spotlight on Seplat right now. We did see it jump 10% yesterday following the announcement that it's going to acquire some assets from ExxonMobil. But what are you seeing for that stock right now? Are investors still bullish on it? Is it a full bid? What is it trading at currently?
Unfortunately, it's just flat. It's still trading at the price of yesterday at this moment. There's not been any bid on it. Little sale going on, little activities on that space. You know, the market takes these messages when they come in first, then you sip it. Then you begin to look at the numbers, then you begin to look at reality. You agree with me? This is not the first time we are seeing those announcements coming, especially concerning Seplat. We've seen that the only place we've seen that announcement coming and we've not had any controversy at this moment has to be in Rwanda. But all of that will have to be, you have to go through the presidency, and NPC is not involved. We're not aware. So for now, market simply news, good news, went up bid today, very mixed.
So you're thinking also, is that the direction you think the market will go today? How do you think the market will close?
Well, looking at my crystal ball, like you all say, green or red, I think the market will close slightly flat. I'm not thinking whether it goes green or red, but as it stands now, I think it will be flat because we are not seeing any gain from any major yet. But like I said, you said it too, 30 minutes, it's a long time in the market. So, and we have almost an hour. Anything can happen.
Definitely, anything can happen, Mukhtar. Look forward to a green close. I hope you're looking forward to that too. Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for joining us on Business Incorporated.
Thank you for having me, Will.
So now let's go over to the Middle East. Let's see if they did any better at intraday, but I don't think they did. It's mostly red at intraday. We see Abu Dhabi is flat, 0.00% down. Dubai also on the red, 0.06%. Let's see elsewhere. Saudi 0.05% down. But on the flip side, we see Qatar almost 0.5% up at intraday. Now, the latest inflation data from Germany spells good news, but what does the November drop in inflation actually mean? And what do organizations like the OECD predict about Germany's 2024 outlook? For more of this story, we are joined by Deutsche Welle's correspondent Warda Imran in Berlin. Warda, can you tell us more about the latest inflation data?
Thanks for having me, Will. Yes, Germany's inflation rate stood at 3.2% in November. That's down from 3.8% in October. This is generally good news because it shows that some prices are falling. But it's also a base effect, meaning that the drop in energy prices signals this drop in inflation, among other things. But that is also because energy prices will not rise in the same intensity or speed at which they did at different parts of last year due to the Russia-Ukraine war. But food prices remain high. They're still up more than 5% year-on-year in November. And I can confirm that prices here rose slowly but surely, and you can feel that impact of food prices on income even if inflation has slowed. Essential things like milk and sugar cost way more than they did last year. All this while wages are rising much slower than expected. But trade unions in Germany and Europe have been fighting and have been successful fighting for higher wage settlements to reflect inflation and the high costs with it. So in short, it is good news because this is the lowest monthly inflation rate since 2021.
That's good news, definitely, for Germany. But what is the forecast about Germany next year, according to the OECD?
Well, the OECD has trimmed its growth forecast for 2024, which is already a bit worrying. On a larger scale, they predict that the euro area, comprising of the member states that officially use this currency, its growth rate will be just 0.9% in 2024. Now, compare this to the OECD's forecast for the US, which stands at 1.5%, and Mexico's stands at 2.5%. The Eurozone is expected to perform worse than North America. The OECD outlined that some emerging markets are doing better than advanced economies. And the organization outlined risks like escalating wars, for example, in Ukraine or in the Middle East. Inflation is definitely a concern for Germany, the EU, and the Economic Organization. And while the inflation is slowing globally, it is far from where it should be. For Germany, the OECD predicts just 0.6% growth in 2024 and 1.2% growth in 2025. It appears that decreasing inflation and higher wages will be good for real income and private consumption, but high interest rates will dampen further investments. There's also a big question about labor shortage and how that will be tackled. So Germany will have a lot on its plate next year and to navigate the slow growth predicted for 2024.
Okay, now let's turn to the markets, Warda. What are investors looking at today?
Well, inflation is in the air, it seems, and that's what the U.S. Federal Reserve will be studying closely for their last meeting of the year. All eyes are on this and what will come out of it. Market observers will also be looking at the U.S. personal consumption data coming out today, which is also what the U.S. Federal Reserve uses to measure inflation. In the rest of the world, Asian stocks rose to clock their strongest performance in 10 months.
Thank you so much, Warda Imran, Deutsche Welle's correspondent there, right there in Berlin with the updates. Now we move over to the U.S., where stock futures were trading mostly flat as all three major stock indexes prepare to wrap a winning November. Futures tied to the Dow Jones Industrial Average rose by 0.04%. Meanwhile, S&P 500 and Nasdaq 100 futures ticked down 0.09% and 0.16% each. Now, the biggest gainers in Wednesday's trading session included Salesforce and Snowflake, rising on the back of better-than-expected earnings. Salesforce jumped 8%, while Snowflake added more than 7%. Now to Asia. South Korea stock markets were up on Thursday after the country's central bank held lending rates for the 7th straight time. South Korea's central bank held its benchmark policy rate at 3.5%, saying that although inflation in the country has been elevated, it's still projected to slow down. South Korea's Kospi rose 0.61% after the monetary policy decision. Meanwhile, China's factory activity shrank for a second straight month in November, while non-manufacturing activity hit yet another low for the year. However, China's Shanghai index gained, and Hong Kong Hang Seng index also rose 0.29%. Now, Japan's Nikkei 225 reversed losses to rise 0.5%. Now, in Australia, the S&P ASX 200 climbed 0.74% and closed at 7,087 points, marking 3 straight days of gains. Now, oil prices fell in early Asian trade on Thursday on weaker than expected Chinese manufacturing data. Brent crude futures fell 0.3% to $82.90 a barrel, while U.S. West Texas Intermediate crude futures fell 0.3% to $77.68 a barrel. Members of OPEC Plus are due to hold a policy meeting on Thursday. Talks ahead of the meeting were focusing on additional production cuts, although details were yet to be agreed. But sources say the cut could be as much as 1 million barrels a day. Now, gold prices consolidated in a tight range on Thursday, hovering close to a near 7-month high as investors awaited a key inflation print to gauge whether interest rate cuts in the U.S. would come sooner than expected. Spot gold was down at 0.1%, was at $2,041.76 per ounce after hitting its highest since May the 5th. That's on Wednesday, and was poised for a second straight monthly gain. Now, investors' focus will also be on comments from Fed Chair Jerome Powell, who is due to speak on Friday. Spot silver fell 0.2% to $24.95 per ounce. Platinum was down 0.2% at $930.24 a barrel. Now, palladium fell 0.4% to $1,023.42 per ounce. Next, we take a peep into the commodities markets. Stay tuned. This is Business Incorporated. Thanks for staying with us. Now, today we're putting the spotlight on milk. In Nigeria, the general price of milk has increased by over 50% in the last year. However, during the World Milk Day in May, stakeholders decried the country's low milk consumption. We're bringing in Fumi Adebowale, analyst, financial derivatives company, this afternoon. Good afternoon, Fumi. It's good to have you on the program. But tell me, Fumi, I'm sure you agree with me that milk is good, except for those who are lactose intolerant. Who doesn't, tell me, who doesn't like milk? Who really doesn't like milk? But it's poor supply. Is it because of poor supply that we're seeing this low consumption in Nigeria, or is it lack of knowledge? Can you tell me? Because I do like a glass of milk.
Thank you for having me. Yeah, like you mentioned, milk is actually essential, especially for children. And we've seen the price of milk increase by over 50% in the last 1 year. So if you look at the dairy industry, it's actually affected by a number of factors, and which is what is driving the increase in the price of milk. First of all, you know, milk is derived from cow, and Nigeria as at 2018 had about 20 million head of cattle. But unfortunately, only about 11.5% can actually produce milk. So that is affecting production. But apart from that, we also we saw that the kind of the way the cattle are being reared also affected the production of milk in the country. You know, Nigeria currently adopts the nomadic system of rearing cattle, which means that you allow cattle to move around in search of food and water, and that in a way affects the efficiency of these cattle. You know, Nigeria on a daily basis, an average cow produces about 2 liters of milk on a daily basis, compared to Kenya, where a cattle produces about 30 liters a day. So the increase in price can be attributed to low production because of all these challenges, and that is actually affecting price in Nigeria. But apart from that, we also saw that because most players in the dairy industry, especially the formal sector, actually import the bulk of the milk they use to produce their products, and that is exposing them to exchange rate volatility. The exchange rate has depreciated sharply in the last 1 year, and that is feeding into the price of the end products, including milk. So all these factors, low production, increased cost of import, are actually affecting the price of milk in Nigeria.
So we do see that you mentioned FX volatility being responsible for the price surge. We're seeing one of the factors responsible for the price surge. But still, if demand is low, for me, why should we see this surge in prices? Because Nigeria, according to reports, says we spend about $1.7 billion yearly on milk imports. That's according to cattle breeders. So are you saying that it's because of this import? What's happening to our production? Why can't we match the milk consumption in the country from the cows that we have, the cattle we have in the country?
Yes, so what we are consuming currently in Nigeria is actually low. An average Nigerian consumes about 9.1 liters of milk on an annual basis, and that is just about 20% of what is consumed in Middle Eastern Africa. I think they consume about 46 liters a day. So what we are consuming is low, and that is because of a number of factors. One is income. Demand is a function of income and price. So when your income increases, you expect consumption to increase, including milk. But when your income declines, what happens is that consumption will also decline. Price is also a factor. When the price of a commodity increases, you expect people to shift to cheaper substitutes, reducing demand for that particular product. But apart from this, we noticed that there are some people that react to milk. They are lactose intolerant. So when you take milk, they throw up. So that is also reducing demand from that space. Then we also know that in the past there's been a lot of belief that milk has actually harmed children, and because of that, we also see people believe that once I take milk, I'm likely to be affected. So it's just safe for me to play safe and avoid milk consumption. So all these factors are actually reducing demand for milk in the country, and it's making Nigeria consume lesser milk compared to its African peers.
I do hope that as we are consuming lesser milk, the prices should also be lesser for me. So we've seen that the Mieti Ala Cattle Breeders Association of Nigeria is saying that the government should weigh in on this, to pay more attention to the dairy industry through budgetary allocation. They're saying this was going to help boost production in the country, milk production in the country. Do you agree with this? Do you think the government should weigh in on this side of the production?
Yeah, I would say I actually agree with that. There should be increased, attention, trying to actually considering the fact that most of the farmers that actually produce milk, they are mostly small-scale farmers. They actually need help in terms of finance, access to finance, and also in that area, I think the government can actually intervene. And considering the fact, another thing is that the fact that we have to resort to imports means that anything that happens to the exchange rate will affect us. But by the time there is backward integration, where the dairy producer, the people that actually use the dairy for their final product have to go back to getting it from the local market, I think that will also help. So, but before that will happen, there's need to increase production. The breed of cattle that is being used to produce milk in Nigeria, I think it only accounts for about 10% of total cattle production in Nigeria. That has to be increased. There is need to invest in that, which could be capital intensive. So I think increasing budgetary allocation to that will go a long way in assisting farmers to actually boost production.
And also we see, hopefully it boosts the gross domestic product, but that's one of the things they were talking about. Thank you so much, Fumi Adeboale, analyst with Financial Derivatives Company. I have my glass of milk. I'm just going to finish it out right after the show. Thank you so much.
Thank you.
Now we'll move on to other stories where the African Development Bank has reviewed downward its short to medium term macroeconomic forecast for Africa for 2023 and 2024. In a statement, the bank says it reviewed the forecast to 3.4 and 3.8% from 4% and 4.3% respectively. Now, according to the update data, Africa's inflation is projected to average 18.5% and 17.1% in 2023 and 2024. And it also urged countries to continue implementing restrictive monetary policies to contain inflation. However, it said this should be supported by fiscal policies that promote economic diversification and remove supply-side constraints. It also urged the countries to boost labor productivity through targeted infrastructure and human capital investments. Still speaking of growth, Zimbabwe's economic expert, Professor Ibo Mandeza, says political instability and policy uncertainties in Zimbabwe has created an environment that is discouraging foreign investment and hindering economic growth. Mandeza was speaking to Channels Television on the sidelines of the just concluded African Union's third men's conference on positive masculinity in Pretoria, South Africa. Let's take a listen.
It's been a long haul. I mean, the current problems that we're experiencing in Zimbabwe, almost 20 years old now, on the back of failed elections, in a state in which it has been very difficult, if not impossible, for an opposition movement to operate, and generally a toxic kind of environment. And then, of course, the economic situation, exacerbated by the issue of sanctions. Yes, so we have a political and economic crisis in Zimbabwe, no doubt about that. And the recent elections were again another disputed election, and therefore there's an impasse right now. Yeah. We have proposed for a long time a transition authority, a breathing space for the country, during which an inclusive kind of government, state, with an infusion of experts, technocrats, can embark on a reform agenda, political and economic, before the next elections. That's what we've proposed. That's what we've been discussing.
Now to Zambia, where the country's inflation has accelerated to a 20-month high in November. This comes as a slump in the value of the kwacha raised the cost of imported goods like cereals, vehicles, and spare parts. According to the Statistician General, consumer prices rose 12.9% from a year earlier, compared with 12.6% in October. It says this is the highest inflation rate since March 2022. Also, measures to halt currency slide have had little impact. Now, reactions have continued to trail President Bola Tinubu's 2024 appropriation bill presentation. One is from Mr. Bismarck Riwani, CEO of Financial Derivatives Company. He opines that the deficit to GDP ratio at 4% is impressive, coming from over 6% in previous budgets. Mr. Riwani was a guest on our Business Morning show earlier. Let's take a listen to him.
The budget deficit last year was over 6% of GDP. You're bringing it down to 4% of GDP. I think that is remarkable. You must give credit. In any case, the budget was crafted by Mr. Budget himself. Ben Akabweze has been on it, so you don't get better than that. So in terms of its crafting, in terms of its direction, in terms of the goals, I think there's no doubt about the fact that a good job was done, right? But
so if subsidy was still there,
then you would have been at 7%, if not 8% of GDP.
Of GDP.
Yeah, but the comfort zone for regional integration in most parts of the world is 3% of GDP, right? So you've gone from 6% of GDP to 4%. Moving directionally, you're okay, but the target is to make it go that way. If you didn't have this, when you say subsidies, first of all, subsidies have not gone. Subsidies have been reduced. But the subsidies are not just in PMS and petrol, but they're also in the exchange rate. So you've taken part of that and taken part of this, and then you begin to do other things.
And that's a wrap on Business Incorporated today. I am Will Ibang. Thanks for watching, and we'll see you tomorrow.